Today we are focusing on Eastern Cape, the June 2016 mid-year exam paper, and on question 6.3, the fixed asset question. The information relates to Chumley stores for the financial year ended 29 Feb 2016. What is required of us is to prepare the asset disposal account, to take into account the disposal of the old office equipment on 1 December 2015. So let's see what information we have that relates to this asset disposal on 1 December 2015. We have an incomplete fixed asset note, and we know we are focusing on the equipment section. So we have some information there with some missing values. And number B relates to vehicles. We are currently focused on equipment. So C, on 1 December 2015, old office equipment was sold on credit for 25,000 Rand. The accumulated depreciation on the equipment sold was 54,800 on 1 March 2015. New equipment were purchased on 1 January 2016, which you don't really need for now, but then we might need the depreciation on equipment is provided at 20% per annum on the carrying value. So we have the method of depreciation. So what we see is we have the consideration or the selling price of 25,000. We have the accumulated depreciation. At the beginning of the year, we might still have to calculate the depreciation from the beginning of the year up till December. What is missing in action here is the historical cost price of the equipment we sold. So first, let's go and determine that value. So let's see if this incomplete fixed asset note can help us. So we are focused on costs. So we want to use our equation, namely that the cost at the beginning of the year plus the additions minus the cost price of disposals, that's the one that we actually need, will give us the cost price at the end of the year. So we see we only have the one missing variable, and that is in fact what we need, because we want the cost price of the assets that we dispose. So let's just see. So we can bring up our calculator. So let's just clear it. So we have the cost price at the beginning of the period, which is the 435,000. Okay, then we will have to add to that the additions. Additions we can see was 126,000. It increased the value of our equipment, so we add. And then we need to subtract the disposals at cost. Let's just call it the variable C for now. So minus C equals 468,000. So let's just add these two up. So we have 561,000 minus C equals 468,000. So let's swim the minus C to across the river to the right hand side. It becomes a plus. Then it means the 468,000 we have to swim to the left hand side. So in other words, we have to subtract minus 468,000. That will give us 93,000 Rand. So that was the cost of the equipment that we dispose of. Now we know that assets usually have or always basically have a debit balance. So we need to get rid of this asset of 93,000. So our asset account, we will have to therefore credit it by 93,000. Therefore, another account we will have to debit, namely our asset disposal account. So this is 2015 and it is December the 1st. The other account we know is the equipment account, and we calculated that the value is 93,000, but let's just show our calculation. So it was 435,000 plus 126,000, which we had to subtract 468,000 from that. So we have 435 plus 126,000. So it's 435,000 plus 126,000, and then we had to subtract from that the 468,000. And then we obtained our 93,000 rand. Okay, so next step is to get rid of the accumulated depreciation. But since this asset was sold during the year, we first have to calculate the portion of depreciation for the time that we did in fact have this asset during the year. So let's see. So the year start on 1 March 2015. So we have to count. So it's the whole of March, the whole of April, the whole of May, June, July, August, September, October, and November. So it's 9 months that we have to write down depreciation, and we need to determine it on the carrying value. Carrying value we know is the cost of 93,000 that we just calculated minus the accumulated depreciation, which was 54,800 at the beginning of the financial year. So we have 93,000 minus 54,800. We have to calculate 20% on that for 9 months. Okay, so 93,000. Okay, we know, let's just first do the entry. We know this is on 2015, December the 1st. Why do we credit it? Because accumulated depreciation, we know is a negative asset. It has a credit balance. So to get rid of it, we will have to debit accumulated depreciation and therefore credit our asset disposal account. The contra entry being accumulated depreciation on equipment. And we said we have the cost of 93,000. We have to subtract the 54,800, which is the accumulated depreciation, and then multiply by 9, divide by 12. That will give us the additional depreciation that we have to add to the 54,800 that we had at the beginning of the year. So let's just get back to our calculator. So we have the 93,000 costs. We subtract the 54,800. On that we calculate 20% and we multiply by 9, divide by 12, 5,750. So that's what we have to add to the 54,800. So 60,550. That is the total accumulated depreciation. Okay, so we got rid of the costs, we got rid of the accumulated depreciation. Now the only thing left is to look at the consideration. So if we go back to the question, it was sold for 25,000 rand. So, and it was on credit. So therefore debtors control is the account that will come into the equation. We know debtors owe us money, it's an asset, so we will debit debtors control and therefore credit asset disposal. The contra entry or other account is debtors control, and it is 25,000 rand. And now we need to see which side is bigger. We have 93 versus 60 plus 25 is 85. We still need something on this side. Okay, so the bigger side is the 93,000. So our total is 93,000. And now we will have to subtract from 93, 85,530. So we have 93,000 we have to subtract 85,530. So minus 85,530. So 7,470 is what we still need. And so we credit asset disposal. We will therefore have to debit another account. On the debit side, expenses increase, so this will have to be a loss. So it's a loss on sale of asset.